This is my February trading recap. I'm Minir, also known as Ghostal Trades on Twitter, and I primarily run a futures algorithm portfolio, which runs of around 10 strategies, trading instruments such as ES, NQ, CL, etc. But I also do trade small caps as well in a fully automated fashion. Now, these recaps are primarily for me, but I try and provide a value along the way and also show you what's kind of possible with trading. These numbers this month aren't that insane or anything like that, but at least shows kind of my journey over the time of the past 5 years that I've been trading. So first, for small caps, in case you haven't watched any of my kind of previous recaps, before I was applying a bit of manual discretion to some of my small cap trading, just because I've been trading it for, like 5 years, give or take. So there are some variables when you're trying to be systematic in small caps that can have a benefit of having experience, such as like going over news, those sort of things, right, that are harder to weigh in a very systematic or quantified manner. However, since I've primarily been focused on my futures trading, I've descaled a lot of my small cap trading and I've just put it as fully automated. So this month was another month of running it fully automated. It's doing a $500 risk per trade. And as you can see, wasn't very insane this month. We got up to about $3,000, give or take, at all-time highs. And then it ran on the way back down to about $1,000 gross. So after fees and everything, I think it was like $600, $500, give or take. So pretty much break-even month, to be completely honest. It was around 26 trades that were taken, 42% win rate, and I have a note here that primarily this win rate is lower simply because it's full automation. There is no manual filter here, such as hot markets, news, etc. Like when we had AI running, I wouldn't be taking as much size on those sort of trades. I wouldn't completely not trade them, but I would lower the risk on them, for example. But now that it's fully automated, as you can see, performance has dropped a bit, mainly because of win rates. But also, I think this month, at least for my systems, just weren't incredibly good. I saw some other people absolutely kill it this month. There were some big trades. So you can see here, my biggest profit was 1,816, which is a pretty big trade for my sort of system, especially for the risk to reward on that, because I'm not normally aiming for more than like, I'd say 1.5, give or take. I'm not going for like, 4R, 5R per trade. It's not that sort of system. It's more mean reversion, give or take. But biggest loss obviously was very contained because it was fully automated. So it was $500 and basically $2. So, it's a bit of slippage basically on that $500 exit. Now, that's pretty much everything I want to go over for my small caps. Let's get into the future side of things. So this is completely automated strategies that are running on NinjaTrader 8. They are on a varying amount of times. Some of them are just on regular trading hours, so like 9:30 to 4 p.m. Some of them are, all the extended hours, and then some of them also do trade overnight, but that's a very small amount of my portfolio. Now, to get in straight into performance, we can see here, if I just highlight it, it was 17.28% return on capital. Now, I always give this disclaimer because I see a lot of people flaunt kind of fake numbers or not very realistic numbers, not kind of giving that nuance. This is return on capital. Obviously, when you're trading futures, you are highly leveraged compared to the notional value of that particular contract. So this would be a small percentage if it was actually applied to the notional size or what I was actually trading. This is just applied onto the actual capital, meeting that margin and basically the equity itself. Secondly, these are primarily trading 1 to 2 contracts. None of them are trading very huge size. So if this was scaled up more, at least from my particular models, the performance would degrade. So I don't have a worry about that right now because I'm not managing 7 figures. Mine is about just above like 6 figures portfolio size. So once I'm at 7 figures or something like that, then I'll kind of face those issues, kind of like I've done when I've worked for kind of small family funds when they're running bigger accounts. As you can see for drawdown was 12.44%. Overall, not too bad for me. I'm kind of used to around 10% drawdown per month. I would say this is a bit higher than I would have liked, but the volatility this month was quite insane. So, as with Trump markets, the volatility increases, you're going to have, higher drawdowns for the most part. And also you're going to get a bit better returns as I'm kind of, getting here as well. Normally I'd want it to be below 10%, but, you take it as it comes. 12.44, totally fine with. Overall, it was 117 trades taken. This is quite normal. I think if you've seen my previous videos, I try and say that I'm trying to lower this to just lower amount of commissions and things like that to improve the predictive signal of each actual signal itself. I think 117 I'm overall okay with. Maybe it could be a bit lower, but I like the spread of it. A lot of this makes a lot of sense for the strategies that are actually running. If you're wondering why I'm hiding the name, it's because each strategy I name it basically what it is, so it's easy to track and document, but also I don't want to reveal all that. This is mainly just me going over my actual review and not my strategies or anything like that. Now, some of you may have already noticed this, that this month was pretty difficult for my strategies. We had around 4 strategies that were just losing money, so negative returns, and we primarily just had one strategy that made up for all of it. This was like an RSI strategy. It was a bit of a combination of it, and it completely crushed it this month. I've never seen it perform this good. I don't know if it was purely from volatility. It might have been. There were a lot of extremes in the markets, especially on the time frame it was trading, but it just crushed it. It just made an insane amount of return that I haven't seen it really do many times before. At least when I looked historically, I think it only done it a couple of times. So this was definitely an outlier month for it. But also the volatility was sort of, very high as well. So that was very lucky. And this is the power of running kind of an uncorrelated portfolio. Well, as low correlation as you can really get, or at least that I'm trying to achieve. To kind of go into that, we can also go through the correlation matrix. So this is based on the profit and loss, and then I can also do another one if you guys wanted to see based on open positions / closed positions on that particular day. We can see for the most part we're getting a lot of green. Green basically means low correlation or negative correlation, which is really good to see, but we are getting some parts with way higher correlation than I'd like. The one I was most worried about was an IBS strategy I was running, and it had quite high correlation during this month. But obviously, as I always tell you in all of these videos, a month of data is good, but you can't really take that much actionable info just based on 1 month, especially if it's a low amount of trades. As you can see here, none of these trades are at a high sample count or anything like that. So I don't try and take monthly assumptions and then quickly change any strategy or anything like that. It's normally after multiple months, so maybe a quarter or maybe even longer depending on the strategy frequency. Now, to give a bit of context, this is what the market looked like this month. So as we can see, we got a pretty nice uptrend for the beginning of it, and then we just sold off. Primarily, a lot of this was due to tariffs. At least that's my assumption. At least that's kind of what's all going over in the news. So we got a very hard sell-off for that. And I think this month was also the first month I've seen in a while where I really capitalized on shorts, and that was primarily just due to this one particular strategy. Every other strategy kind of failed. I did get, I guess the strategy didn't do too bad with 4.71%, but still for the amount of drawdown it had was still not great performance, whereas this was almost 20% return for 4.7% drawdown, which is in my books amazing. Give you a bit of extra notes, I've just kind of put over here my overall thoughts. So obviously overall performance was 17.28% with a profit factor of 1.27. Performance distribution is definitely uneven, which basically means I had, as I kind of mentioned, 2 successful strategies really, and then the rest were just kind of losing or break even. The best performer, as we went over, was 18.96% with a 1.98 profit factor. Now, the worst strategy was actually at minus 4.28%, which still isn't terrible. If this was like minus 10%, this would have been a very rough month for me. But luckily, none of them, completely drew down that bad. Now, as I showed with the correlation matrix, several strategies had very low or negative correlation with each other, which is really good for portfolio diversification. If you're new to the channel, what that's primarily going over is we're trying to use the holy grail that's kind of coined by Ray Dalio and Jim Simons, which is building a portfolio of uncorrelated either assets or strategies. So in my case, I'm applying it to strategies, and I'm doing automated strategies in the futures markets. But this can be applied in other areas, like I'm adding strategies in the crypto markets and things like that, as I'm kind of getting more up to speed with those particular markets as well. Now, my reversion strategy showed negative correlation with several other ones, which is kind of which was really good to see. Obviously, that's kind of expected because a lot of this month, if you actually sort of think about it, right, we basically got extended and reverted, but then we just went a lot more on the downside. Fair price, if you were going to say it as a general idea, is like fair prices over here, right? We got to it and then just kept on fading down, and that was mainly because of the tariffs. At least from my perspective. Now, as I mentioned, there are some concerning signs which I had high correlation exist this particular month, but it's only a month, so we'll see how that kind of proceeds over the next coming months. Overall, I'm pretty happy with this month. It was very good diversification overall, with a mix of correlation values, which helps explain how the portfolio maintains a positive performance despite having several negative returning individual strategies. Overall, as the last thing I really want to note for everyone, the main value I can really provide from this is it really shows the power of a reasonably diversified portfolio of automated strategies. Obviously, I don't think you're ever really going to get fully negative correlation over multiple years to the main indices. That's very difficult to achieve. Obviously, some people have done it, like Bill Dunn, and there's a couple others as well. But to actually do that as a retail trader, unless you have a team or something like that, quite difficult. But if we can try and build at least a low correlation portfolio, then when you have strategies that are struggling, like I did this month, like I had 4 strategies that just completely lost money this month, and luckily I had one strategy that wasn't correlated to those, those and, returned a really high percentage, which made up for all of those. Even if that strategy had only made up for the returns and then left me at break even, that's still a way better result than if I had just run those individual strategies myself. Let's say I only had one strategy and one of them was just losing this month, then that would have closed out this month negative. You also don't need that many strategies to become sort of diversified. I spoke about it recently on this kind of podcast I'm hosting with a friend of mine called Systematic Shenanigans. And we went over that a lot of the benefit of diversification comes within the first, 4 to 5 strategies, give or take, that you're adding, or assets as well, like if you're doing different markets, instruments, etc. And then from there, you still do get benefits from diversification. You just don't get as much incremental benefits, right? When you're adding each one. So think of it like as diminishing returns. But yep, that's my recap for February. I hope you enjoyed. I hope your month was great. Let me know how your month was in the comments. But apart from that, have a great day.